Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is Trading the FOMC Minutes. Today, I'm going to tell you exactly what the FOMC Minutes are and how they're a little bit unique to trade. We've also got some trade updates that we need to go through. Great winner on the Australian dollar, New Zealand dollar. We have a new trade idea out on the Kiwi itself against the United States dollar. We've also got a few other things that we need to go over. But with regards to what's happening in the markets today, I got a great question from Bobby Bob earlier, a part of our How to Trade community. And the question was simple. It said, Shane, are we looking at bidding WTI crude oil? And I said, we're getting there. We're getting towards spring seasonality. We're getting into some market drivers that really are sending the market seemingly north every day. And as fast as we were ready to sell the market in the fall and the wintertime, we're ready to buy the market now. So we're going to look at that WTI crude. We had a big announcement out of J.D. Vance, the Vice President of the United States, about potential war with Iran. That has sent crude oil, and it's trending right now. We're up about 4.32%, right at $65. I'll go out on a limb. I would be surprised if we close above $65 today in WTI crude, but definitely an interesting session. We talked about how bad yesterday's session was for oil. Today's been a lot better. A lot of levels came into play, so I'm pretty happy. Anytime I see the market moving, I'm pretty happy. So good to see everybody back in the room. Pack up. Hello, Shane. Gold was golding as usual, as well as oil and silver. Yeah, I mean, it's we're gonna go ahead and take a look at silver as well. We're gonna pull our 9 EMA on a couple of those charts and see exactly what's happening. But I can tell you that it's definitely an interesting dynamic that we're being faced with right now as traders. We don't really know which way to read this price action. It's curious. It really is curious. So it's good to see everybody is on that same wavelength, is on that same vibe as I am. I'm falling back almost exclusively on my technicals these days. And the news cycles are crazy, but they're not as crazy as they were. And we've actually seen things calm down a little bit over the last week or so. But clearly something is going on. The underpinnings of this market are obscure. And I am just going to stay out on the limb. I think it's the Epstein files. I think something in there, or the way that the investigation progresses, or the way the subpoenas are going to come out. I think that has the world of finance really concerned. A lot of traders concerned about being long, or short anything. So there's a lot going on there. We're not going to cover that again today, but the next big development, we'll cover it. Today's all about the FOMC Minutes, so I want to welcome everybody into the room. Big round numbers are back. Yeah, I mean, we're starting to trend higher. That Aussie Kiwi trading right up around 118 right now. That was a good trade. I really like that one. Let me see, Carabo, another day, another dollar. How's it, Shane? I'm doing very well. I had a pretty good trade earlier today on WTI crude. I felt good about it, and it was a really great scalp. So I'm feeling all right. Still a little slow for me, though. This week hasn't been great. Doing okay, I guess, but some of these weeks you just got to stay patient, stay positive, and stay patient. Jeanette, good to see you. Jeanette, welcome. I'm sure it's the middle of the night where you are, so that's just certainly always appreciate you showing up live. Andrea Garwell, good to see you. Andrea, welcome. All right, everybody, if you have any questions, be sure to ask as I'm moving forward. The biggest thing that we need to remember here is that we are trading the FOMC Minutes today. Now, a lot of you, I get a lot of questions going, Shane, when's the press conference? Shane, when's Jay Powell going to speak? That doesn't happen today. That doesn't happen today. What this FOMC Minutes release is it is a brief that basically sums up the dialogue of the last Federal Open Market Committee. So this is going to be from January. You'll see this is a good example of a previous release. So this was from the December 9th and 10th meeting. This was released earlier this year. And you can see that this is just a document. So the biggest thing that I want to stress, if you're trading and you're showing up waiting for the Fed to make a decision on an interest rate, or you're waiting for somebody to say something meaningful about Fed policy, you're probably not going to get it today. Now, there's a couple of things that we need to focus on in this document. Number one is how to trade it. Well, the biggest thing to remember is this thing drops here in about 57 minutes. You're not going to get a huge rush of volatility into the market right away. You really aren't. What you're going to get is you're going to get some media reporting and media spin. Basically, the Financial Times or whoever you read or watch or listen to that's covering the markets, they have to read this thing. So if they have to sit down and read this thing, they also have to interpret this. And when they interpret this, the biggest challenge is going to be what those headlines say and how do we read the headlines. So when I'm thinking about the FOMC Minutes, it's all about media spin to me. It's all about media spin and what exactly the talking points are coming out of this document. In my view, there's really one thing that's important. Well, there's going to be two things that are important. The first thing that's going to be important is I want to see if there's any divide in that boardroom. I want to see who's hawkish, who's dovish, who wants rate cuts, who wants to hike rates. That's what I want to see immediately. So if we have a split room Folks that maybe half of the committee members, well, we believe economic growth is going to be okay, but we need to cut interest rates to spark economic growth. If that's half the members, and then the other half are saying, nah, we're in a good place. Let's hold them where they're at, or maybe even raise them because we're worried about inflation. We want to know what's going on in that boardroom, that divide. We're looking for any verbiage that maybe pits one member against another. They never release that stuff, but let's say there's a faction, the committee overwhelmingly says this, or the committee was mixed on this. Things like that. That's what we're looking for, because what that indecision tells us is that there's trouble in paradise. There's a fight going on in that boardroom. Some want to cut, some want to hike, some want to keep it where it's at. That's what we want to know as traders, and that's what the market will react to. That's the first thing. The second thing we have to do is one of these things that we haven't had to deal with before, but we have to now. Welcome to the Trump administration 2.0. I mean, there is an active investigation. The U.S. Department of Justice is conducting a criminal investigation into Federal Reserve Chairman Jay Powell, focusing on potential false testimony, perjury. We were actually way ahead of your AI overview here. We talked about that immediately. Basically, he perjured himself in front of Congress in his biannual monetary policy hearing. And it was regarding the $2.5 billion. I think that's the number there, the $2.5 billion renovation of the Fed's Washington headquarters. So what could this mean? Well, I want to see if the FOMC is talking about it. I want to see if they're talking about life after Jay Powell. I want to see if they're talking about a problem potentially facing the Fed chairman. So those are the two things that I think are going to be very big. We could also say that, something in crypto would be big. I'm not necessarily certain that they're going to say much about crypto other than, wow, it's volatile. I think that that's a possibility. But as far as the rest of it, you're looking for a divide, and you're going to be looking for anything coming out of there that has to do with Jay Powell's investigation. And it's not just against Jay Powell. It's against the FOMC. But that's one of those deals. They never could convict Al Capone of anything in the United States, biggest gangster in American history. They could never convict him of anything except tax fraud. Well, this could be a situation where they're looking at Jay Powell and they want to do so many different things about maybe some structural issues in the bank stress tests, fractional reserve lending, all the things that could get a banker in hot water. Maybe they want to do some of that, but maybe this is the only thing you're looking at is probably a perjury charge. Now, let me be very clear. I don't believe you're going to get a perjury charge. I believe that these charges have been brought to apply pressure, not just to get Jay Powell maybe to loosen interest rates or maybe to step down early, but maybe they're applying pressure. Hey, finish the project. We got to get this $2.5 billion Fed place or Fed headquarters off our books. A lot going on with this FOMC minutes, but remember, you're not going to see the immediate volatility in something like the Kiwi US dollar. It's going to take a few minutes. The media is going to have to read that brief, and then they're going to have to report back, and the markets have to grab it and run with the talking points. That's the big thing. So, all right, let's go ahead and get into some price action here. I think we're in a pretty good position to make a few trades. Late week, we had some really great stuff happen in the Euro FX futures earlier. Pretty good illustration how Fibonacci's work. Let's go ahead and look. Let me see SGK. Hello. It's been a while. Hope you're doing all right. I'm doing very well, SGK. Thank you for asking. T. Marina, hello, T. Marina. Happy hump day. All right. Life after Jay Powell sounds like a movie. I think you're going to see a lot of rate cuts, and we'll get into this Warsh gentleman, the nominee for the Fed chair. He's got some connections that are in the files. I'm going to leave it at that. He's a derivative of the Estee Lauder fortune. And if you guys want to start Googling around, seeing what's on the internet there, Estee Lauder's a big cosmetics firm. The billionaires that run that are directly tied to Mr. Warsh. That may take him down by the time they get around to confirming him. So I don't know what's going to happen here. I really don't. I wish I did. If I did, I would tell you. I really would. I'd say buy, sell, buy, sell. I don't. The beauty of this is there's enough volatility in these markets right now that there's a lot of trades to be had. And if you're struggling, that's okay. Keep at it. Keep working your system. Keep working your discipline. That's for sure. Oil is flying up. DQ, what are we're printing? $65. I'm not sure we're going much higher than oil. We'll look at that as well. Ryan World, what are we farming on the FOMC? FOMC, like I said, this is the minutes. This is the documented release. This isn't a press conference or an interest rate decision. So, interesting. We betting U.S. dollar, Canadian dollar, gold. We're going to go ahead and look at the Kiwi first because we did get that RBNZ interest rate decision, and then we'll go ahead and look at anything you guys want. I've got a few ideas out there. Aussie Kiwi came in. This is the Kiwi, and then also dollar yen we got to look at, and then some interesting stuff on your Euro FX futures and basically the Euro USD. And of course, gold and silver. We got to cover metals as well. All right, let's go ahead and get to it. This is a good trade idea that we put out a little bit earlier today. This is going to be your Kiwi, your NZD USD pair. You can see we've sort of got a nice weekly support level coming into play that I absolutely love, right around 59.50. Love big round numbers. 59.50 is pretty big, pretty round. So right in there. Steve Francis, good to see you, Steve. Welcome. Right there, 59.46. That zone right in there is more than likely going to pan out to be pretty robust support. So if our FOMC minutes drive us a little bit further south in this, maybe the dollar gains a little bit of puff, we're up about 0.5% in that DXY, then this pair is just going to come right into our wheelhouse, right around 59.50. So check out that trade idea. I believe 51 was the key level, and we're looking for about 35 pips out of this trade. Nice and tight, but still a pretty good trade on a weekly pullback that I absolutely love. Weekly charts in the forex are some of my favorites, no question about it. Give you really good entries more times than not, that's for sure. Let's go ahead and just update you on this Aussie Kiwi play. This was a trade idea that we put out yesterday ahead of the RBNZ. Really panned out to be pretty good. You can see our support zone right in our kill zone there, and you get right out to the chart. You see weekly, I mean, we just absolutely broke. Freight train north, that's exactly what I like. There it is. I mean, then when we start talking about trades and what Fibonacci levels are supposed to do and what a convergence of a daily EMA plus a Fibonacci level, 38% plus my 13-period EMA, no hesitation. A lot of folks ask me a lot. They say, Shane, what is your favorite trade? If you had to bet it all on a market or on a trade, what would it be? And I would say when you have convergence between key Fibonacci levels, when you have a 13-period EMA involved, and you also have maybe a key level, sold. I'm buying every time there. And right there you see 116.93. So we had a proximity to 117. We had an EMA down there at 116.85 and a 38% at 116.93. I mean, that type of trade, unless the RBNZ really shocked the world and brought about just a huge hawkish move, we were in a really great position to win that. Too much convergence to ignore. Typically, I don't ignore those. Those are fantastic. Now, that's a convergence of longer-term indicators. This is a good look at your intraday chart, something that I was trading earlier today and it was very good. I mean, it was this E-mini. It's not an E-mini. It's a Euro FX futures. Man, 4 years of live streams, 5 years of live streams, and I still say that wrong every single time. Euro FX futures. This is the March contract. Okay, so what we have here is a nice big sell-off, and I really want to show this because it was beautiful. When you're a Fibonacci trader, you like them. You like the levels a lot because they've worked for you over the years. And for me personally, spike high right there, just absolutely beautiful timing. 8 a.m. Eastern, you can see volume starting to pick up a little bit. Big sell-off. And then the bounce right off of those lows, and just, 1, 2, 3 beautiful trades, and then you get the trend continuation right up there at 118, 118.41 was beautiful. So it doesn't really help us now, but where could we possibly be looking at maybe to make a trade later in the day after the minutes come out? I've got a moving average down here right at about 1801, 1801.5, so about 1802. That's beautiful. And then this, I have a lower range number, which is secret sauce, but that's hanging right around 1802, and you've got 1800 right there. So that's pretty good if you're trading those Euro FX futures, which is one of my target markets for February for sure. Now, let's back off. Let's back to the pair that it's based on. It's based on the Euro USD. So let's go ahead and pull up some of my levels and see where exactly they are for this product. You'll notice we've really broken to the bear today. Very, very tight trading, very rotational for about a last week or so. You sort of had that hammer formation that didn't come into play at all. And now the Euro USD really is trending south. Dollars up, euros down. That's fine. So what can we really do here? Well, there's lots of different ways that we can approach this. A lot of folks love smart money concepts. They would say, well, this is a bullish liquidity sweep. And I'd say, okay, I would call this order block very, very important. You'll also see that this low that developed, let's see, back on the 6th of February. So this is your monthly low. Your monthly low is right down there, right around 117.65. Now, in and of itself, I don't really love that level. I don't believe it's tradable. A lot of folks are going to be bidding this market from right down here, and that's okay. If you want to play with big stop losses, you're more than happy to do so. You can see you've got a weekly chart right here, and this is interesting. What's our weekly EMA at? 117.61. So I would definitely have that up on my list. 117.61. Potential downside support. How about a Fibonacci level? Weekly, spike low, spike high. You see, now we're building a case. Now we're cooking with gas. And you get excited. You start seeing all these things line up. Take a look at that. My EMA is present. 62%, one of my favorites. Market's coming right into our wheelhouse here. Absolutely love it. I think we're going to have a fantastic opportunity potentially to step up and bid with some confidence from down there. The only thing that I don't like about that trade is that there's no big round number. So could it be a little bit dirty? Yeah, it could be dirty when that level gets tested. 117.69-ish, 117.62-ish. Still robust bids probably from 74s, looking to get that rotation back up right up around probably 118.29. Good trade, though. Potentially could come into play maybe as early as today if we get a big surprise out of those FOMC minutes and maybe the dollar gains a little bit more puff. We could be in pretty good shape. Now, a lot of folks have said, oh, man, Shane, the dollar's rocking today. And I'm saying, no, it's not. Let's be very, very clear about what's going on with the dollar. Very clear. What's going on? Well, number one, I got to adjust my charts. Okay, that's great. It's a downtrend. You got a little bit of a bump to higher of about 0.5% for the month. We're on the 18th day of February. Very tight month. You are not bullish this month. You're not trending higher. You're not making a big move. None of that's happening. This market right here is still extremely bearish. I always come back to this. I came back to this on our market analytics, our switch market hot picks this last week. I said, hey, listen, just because the market, we think that maybe the U.S. dollar is well off of those lows right around 95, you're still bearish. You're still bearish in a big way. You're still bearish in a big way. So the only thing that could really shift that right now is going to be this document. If there's something in here that says, yes, we're going to raise interest rates because what? Because inflation is too high and economic growth is solid. So remember, when those minutes drop, first thing we're looking for, a fight in that boardroom. I want to hear about it. I also want to hear more if they're even discussing the investigation against Jay Powell. But past that, what can we read? Let's read the tea leaves here for a second. What can we say is very, very important from a policy standpoint that would drive the DXY and get it out of this tailspin? Not just holding interest rates where they're at, but maybe hiking interest rates. So somebody in that room is going to have to say, I'm worried about inflation. And somebody else is going to have to say, well, I think our economic growth is right on track. As a matter of fact, it's robust. So as long as that economy is viewed as being expansive and employment's in great shape, all right, couple that with maybe inflation's a little bit too hot. Maybe we need to do more to bring it down to our 2% objective. That would mean rate hike. Now, we're not even pricing the chance of a rate hike this year. We're not even pricing it right now. You can see 28 days to our next meeting, 94% chance that we are going to sit exactly where we're at 3.5%. To me, I think we pretty much know when we're going to get the rate cuts. That's going to be in June after you get a new Fed chief, and you're looking at maybe a quarter, maybe a half point. I think it's going to be further over here. We're not even talking about a rate hike. So is it even feasible that there's going to be anything to drive the dollar higher this year? Not really. Not really. You can see this is our normal distribution. If you're a statistician, man, I am struggling with S's and T's these days. If you are a statistician or a statistics major, something like this probably looks very familiar. It's funny. I was looking through some of my old college textbooks the other day. I just happened to run across them, and I said, yeah, that's a normal distribution. What is it, a Gaussian curve, a bell curve? That's the idea. So the idea is that when we're dealing with the unknown, our expectations in the middle. All right, this is the middle of what we think is going to happen. So our middle case is probably what? A 0.5 point rate cut by the end of the year from where we're at. I believe that's wrong. I believe by the time we get to July, you're going to start looking at this area over in here as being where this area is. And that's going to significantly weaken the dollar because right now, remember, all of these expectations are priced into the cake. They're baked into the cake. They really are. Everybody knows, okay, we think probably a 0.5 point by the end of the year. But what if it's more? I'm calling for 2.25 to 2 being our prime rate. I think there's a real chance of that happening. If that happens, it will surprise the market to the dovish end of the equation. It'll send the dollar down, metals up, stocks up. That's just sort of what we're dealing with there. So I'm fascinated by this stuff. I've been studying it for a long time, and I've been trading in it for a long time. Now we're going to get into the sort of the technicals here. I can look at some more news events. Maybe in a minute we'll look at some of the data that came out earlier today, but it's not really that big of a deal. We need to focus on more of the technicals and what could happen in our markets here in T-minus about 40 minutes. I'm not expecting much to happen. I think you've got a pretty good move on the top side of this for stocks, but we will go around the horn. If there's any markets that you'd like to look at, we're definitely covering gold and silver here. We've already covered the euro, the Aussie and the Kiwi, the Australian dollar, Kiwi and the Kiwi. So we're going to start diving into these markets, showing you some different things technically, maybe showing a little bit of that 9 EMA strategy. As a matter of fact, that's a pretty good place to start. Right there, Bab, Shane, how about the Great Britain pound Japanese yen? Absolutely. We'll look at that in just a second. Mister, how about gold? Absolutely. We betting dollar CAD or gold? I'll look at all of them. That's for sure. And we'll start moving pretty fast, so we'll get to your market quickly. Tina Jin, good to see you. Tina, always a pleasure. I answered your questions from earlier in our private chat. I hope they help. If they didn't help, get back to me, and we'll take another look at your inquiry and see if we can get you squared away. All right. Here we go. Let's get right out to the 9 EMA strategy. This is one that is actually becoming very popular. We put it out not too long ago over on the Switch Markets website. So if you're interested in trading the 9 EMA, I actually put the link in the YouTube chat. If you're new, the 9 EMA strategy, how to install. Enter your email address, get your strategy pack. It's going to send you sort of in your download section a zip file. Open up that zip, you get PDFs. You get videos, you get everything you need. Actually, at the bottom of this page, here's the full video. So definitely check that one out, that 9 EMA. Pretty good strategy. We're getting a lot of great feedback there. I like to go over a few of the tenets of this strategy live pretty much every day. I'm not going to spend a ton of time on it today. But the basic premise is this. When the market gets overbought or oversold, and then we get either a cross above or below the 9 EMA, then we get a trading signal. It's not a signal. I can't say signal, excuse me. Then we get a trade setup. And right here you can see that would be a buy setup. That's a sell setup. This strategy, there's a lot to it. And where the art really comes in, where the art form really comes in, is understanding maybe how to set your stop losses and your profit targets. This one right here, you probably shouldn't have got stopped out on a 5-minute chart up there. You got to give at least a little bit of love to your stop losses. But we'll talk more about that, and we do in the video and all of that jazz. But so this is a good look at it, really catching a move on the Euro USD. Now, I mean, we're always forward thinking. What are we thinking now? Well, we're in oversold territory beneath 30. We're looking to grab a buy. We're looking to grab a buy. So I'm going to watch that out of the corner of my eyes. We look at some of our other markets. The dollar yen, exactly the opposite right here. Now you can see we sort of had an interesting, nice little bump sell there. We didn't quite catch this. This is a 5-minute time frame. This is all intraday stuff. But this right here, you're sort of rocking and rolling up above 70. So the sell is definitely possible. We'll keep a close eye on this. You may get a sell on like a 1-minute chart or 5, or excuse me, that was a 5. Here's the 1. Definitely, if you get a cross under, you're going to be selling the 1. I don't recommend that. Now with the FOMC Minutes release, a 15-minute chart, probably a pretty good duration for you to get in there and maybe take a trade later today on that dollar yen. Okay, gold. Gold's interesting. And we're going to spend some time on metals here because everybody wants to know the metals. Do I buy it or sell it? This is what I want to stress, and I really want to stress it. This market is an absolute chop. Gold is choppy. There's no question about it. Right there was your sell signal. You got a little bit of a follow through, and now you're just sort of milling around that 5,000 level. Now I talked a lot yesterday about gold and 5,000. Let's just go ahead back to that chart and take a look. I mean, that really is it. So you've got 5,000 there in gold, and the market's just rotating around that 5,000. So let's bring this down to a daily time frame, and you can see exactly what I mean. That's really tough to trade. You've been inside of that 3-day range now for about 3 weeks. 3-day range, 29th of January, 30th of January, 2nd of February. This is hard. This is really hard trading, and you'll notice that I haven't been putting any trade ideas out for gold. Now, right this minute, what's happening? You are knocking your head against 5,000. No question about it. Let's take this down to a 1-minute chart. Sort of sold off. It was a little bit of support right in here. But, I mean, we have straddled 5,000 all day long. U.S. session right around in here is when business really picked up. A tremendous runner right here. In gold, there's your cash open, Wall Street cash open. The market absolutely explodes and seeks its level. There's an old saying like with water, you know, you pour water on a table or pour any fluid on a table and it seeks its level. That means if there's a dip in the market, the water fills in. And then also if there's a bit of a peak, it rolls off the peak. Well, here's the deal. 5,000 is the level. It is. I mean, it's the area of fair value. It's the key number. It's whatever you want to call it in gold. That is what it is. It's 5,000. So the big question is, Shane, am I buying or selling 5,000? I wouldn't do any of it. I really would. Now, you could easily say, oh, look at all these beautiful scalp sells. Those are all great. And I'd say, yeah, but you don't really know what's going to happen here at 5,000, especially after the FOMC minutes. So what would I be looking to do? I mean, if you had to trade 5,000 today, what would be the best way to do it? I mean, look at that 30-minute chart. That's just, oh, wow, it's bad. Gold's up about 2.75%. I would probably step back and be looking to do something like this on an intraday basis. 30-minute Fibby, and there you have it. Do you guys think that there's any reason why we're consolidating right around 5,000 today? Not on our daily, today. FOMC minutes. Got a market driver coming our way. We've got something that's going to happen in the markets that we just don't know which way this thing's going to break. So now what's happening? The action is log jammed at 5,000. Maybe a play from down there, 38%, 49.71 and a quarter, maybe. Probably an intraday scalp. But I would be careful. I would be really careful, especially with this news coming out. You don't want to get caught on a day like today. You don't want to get swept out of the box and take a big loss on an intraday trade. I just wouldn't be doing that. Now, as far as what's the rest of the picture? And I've got a lot of questions on gold because, well, everybody trades gold. And I always like to have ideas for you, trading ideas for you, just levels that I'm looking at. I will tell you, for gold, I am on the sidelines. And now I sit down, I got my YouTube hooked up to my big screen out front, and I'll sit there and I'll look through videos. And a lot of it, I'm looking for traders and analytics and just seeing what everybody's talking about. And pretty much everybody's saying, here's how you trade gold. 50 pips trading gold, 5,000 pips trading gold. I'm not interested in any of that. I'm not going to jump on the bandwagon here to try to say, okay, if you're a gold trader, I'm your guy. I'm not going to do that. I will tell you that gold futures are one of my bread and butter, and I haven't traded them for 3 weeks. I haven't done it because the daily volatility, the daily ranges, the 30-minute bars, they're huge. And I want to be involved in something that, yeah, it's true there's a lot of money there. And maybe if this was October or September, October, when I've already made 9 months worth of money for this calendar year, then yeah, maybe we're going to jump in and make a decent year, a monster year. But right now, the last thing I want to do is get knocked out of the market trading huge volatility in February. I want to be around. I want to make sure that I've got momentum. I don't want to dig a $10,000 hole in February and have to fight out of it by June just so I can trade the rest of the year. I'm not interested in that. So I've avoided this market. Now, I'm not saying that you can't trade it. There are levels out there that I am looking at for gold. There's no question about it. But that consolidation around 5,000 scares me. Really does. It says, oh, man, it's just choppy. Now, we knew this. This was a longer-term play that we had out there earlier this year. There was your low. There's your all-time high. There's your pullback to 38%. That tells us the bullish trend, the long-term bullish trend, is still technically intact. That's great, right? So we have a level down there, 44.30, but I mean, we're nowhere near price action. We're still $500 off of it. So if you've got 5,000 setting up as it looks to be legitimate topside resistance for this month, and you've got 44.30, I'm sort of expecting trade. Let's mark this. I'm going to mark this quick and dirty. Be sure to dial these in exactly. But what we're looking for is probably a period of trade that's going to ricochet around in here. So I want to see a test of this bottom end. I want to see 4,500 buys somewhere in there, and then we can start playing rotation on a more regular basis. But, I mean, right now, even let's pull a 4-hour chart. Typically, I'm a big fan of the 4-hour chart. I'm not digging it. I mean, that's a move right there. Boom, boom, and then look at what's happening. I mean, there's an old saying. I mean, I haven't drawn the alligator's mouth in a while, but there's an old saying of what I was taught was when it looks like there's a closed alligator's mouth, you don't trade it. You know, what does that mean? It means rotation. So boom, right here, that's the alligator. There's the teeth. There's the snout getting tighter and tighter. It gets really tough to call markets like that. We have tools for it. I don't know with daily ranges and hourly ranges like that in gold. I don't know that that's the best thing to trade. I think there's better things out there. All right, let's still go ahead and take a look at the silver market, and then we've got some other questions. Any market you'd like to look at, drop it in the live chat. I'll be more than happy to help. So weekly chart on silver. Now, who can afford to trade silver weekly? Nobody. On leverage, nobody can. I mean, you're getting into, if you're using weekly technicals to trade silver and you're using these huge stop losses, either take your leverage down to almost nothing or be aware that the swings will be epic. They'll be monumental. Now, as far as silver goes, very similar. Sell signal here on the weekly, compression inside. Look at what you have. You're trading right back up to that 9 EMA. Fascinating stuff. Absolutely fascinating stuff. Flat. That market is flat. This was the volatility of all volatility. I mean, we always get questions. I mean, do people really go to the ledge over this stuff? That type of silver probably sent more than one person out on their ledge. Now, I'm confident they didn't jump. They thought better of it. It's just money. But when you start talking about this kind of movement, this kind of action, it truly is epic. We saw a 30% dive in one day in silver. I still have a lot of questions about that. But what are we really looking to get accomplished here? There was your big dive. Now we're just rotating around. There's no rhyme or reason to anything this market's doing right now. I can still say that it's bullish. We could pull a monthly chart, and I could show you all the ways that the long-term trend is still there. And if you're an investor, a silver investor, that's great. You don't have to worry about making these plays. But if you're a trader and you're getting into the market and out of the market, you have to make decisions, 50 of them a day, it's not good enough just to know that silver's still in a bullish territory. Now, what's the difference between this monthly chart and our gold monthly? Our gold monthly bounced off of the 38%. That means that it's an extremely strong trend. So if I had to pick which one to be long, I would still be long gold. However, the trade location for either is really difficult. What about down here? 62%, 63.90 or 64. That's a beautiful level. We're always watching that. 50%, what is that? 74.92? Right around 75. That's staggering. That's absolutely staggering. The rotation instead of 5,000 is at $75. It's the same. It's the same concept as we just went over in gold. There's your key level. Take it down to a 4-hour chart. What exactly has happened here? Look at. I mean, you get away from it, and then you come back, and then you bounce, you go down, and you come back. 75 has been a catalyst for what, about a week? Well, last several days. Yeah, about a week. Today's the 18th. This was back on the 11th, 12th or 11th. That's an incredible catalyst. So if you were going to scalp maybe a little bit later today, I probably would say that maybe you could scalp to the top side for 75. Now, that's a lot different than selling 5,000 in gold. Why? Because we're still sort of bullish gold. We believe that it could jump way up above 5,000. This one right here, we're still bullish silver, but like an intraday scalp right around there, it's risky. It really is risky, but I could see where that would be more of a trade than, say, your gold at 5,000, just because you sort of pulled off of this zone a little bit. However, very high risk. Very, very high risk. That's for sure. All right, let's see. What do we got here? All right. Let's see. Check out the U.S. dollar, Japanese yen. Absolutely. Yes, sir, I will. And the Great Britain pound, Japanese yen. So we'll talk yen. Got way behind on the live chat. Akash, bro, take a breath. I know you are not in the trade and you are cling to it, so please slow down. I can't slow down, Akash. I'll try to slow down, but I can't slow down. We're moving fast today. We got a lot of trades. No, I'm kidding. I need to slow down all the time. Matter of fact, that's great advice when you're trading. Slow down. I hear you. All right, I'll slow down a little bit. Let me see, Akash. 5,013 is the stop loss for a sell. That's a lot. That's a big stop loss. You're looking at probably, what, $20 on that sell stop for gold? I don't know about that. Let me see. No big loss today. Fars, buy or sell for this time? Fars. I don't know that I'm recommending either. I don't know that I'm recommending either a buy or a sell. Behram, a 1-minute time frame. Fibonacci's. Hello, mister. Hey, Nico. How are you doing? I'm getting a good laugh out of Behram over there. Fantastic. Fibonacci's, laughing out loud to Fibonacci's. I've been ringing the cash register with Fibbies for 15 years. I still get a laugh out loud. I love it. But most people that use Fibonacci's have no clue what they even are. They just know, oh, those don't work. Yeah, they do. Yeah, they do. That's for sure. Nico, hello. How are you, Nico? Let me see. Nico, do you have anything you're looking at in the FX at the moment? Well, we talked about the Euro USD a little bit ago. We're going to dive into those yen pairs here in a minute. Take a look at the dollar CAD. What about BTC? Yeah, good question about Bitcoin. We have buys at 58,000. I'll cover Bitcoin here in a second. Clear sell in the next minutes. There's nothing clear. Nothing clear. Falling knife, Bomlin, falling knife. No. I think it's going to be a chop circus. I think it's going to be an absolute circus that's going to nail the shorts and the longs. That would be my guess. Can I short gold? I wouldn't, Sam. Even though the FOMC minutes are going to be a nothing burger, it's too risky. Something in there might shake prices, and we can't do it. For the gold, XAU USD, mark my words. All right, Bomb, I'm on. I'm booking that action right there. You're saying falling knife. Clear selling what? Name your market, though. You can't just say it's a falling knife. For gold, you're saying it's a falling knife for gold. put our thinking hats on. Well, here's the thing about the gold, intraday gold. Nice rally. We already did this, but seriously, I mean, it's in a very, very bullish situation. So you're betting that it's going to fall, and essentially, I think I just saw that. So your stop loss right now, I believe 513 was the stop that was put out, and then the belief that this market's going to crash here on the news, something like that. All right, you're not wrong. I never bury anybody's trade ideas. I think that trade ideas are a big part of what we do as a trader. Is you got to have ideas and you got to have conviction. It's a big part of the equation. It's not just Fibonacci's, EMAs, crossovers. What really would trouble me about holding shorts here is, number one, the long-term trend is up. Number two, the intraday trend is up. Number three, the dollar has sort of, the DXY sort of rallying is the only thing that's kept you in check here for the past several hours. So let's pull a gold futures chart now that you want to get out in the weeds. Let's get in the weeds. All right, so gold futures right here. April gold futures. This is what I trade. Time price offering charts. We're not going to get too deep into this because it is complex. The problem that you're going to run into with taking this trade and putting this stop loss right up in here essentially is what you're talking about. You can't really find the volumes on your spot gold markets as well. They're just tick volumes at best. These are actual exchange volumes. So when I'm looking at something like this, that white line, it's not yellow. That white line is called the point of control. Odds are you're going to test that point of control. Where is that point of control on the chart? Right there. 5,020. You got a POC from yesterday down here. Maybe you could do it. Maybe you could do that. Got a value zone right here. This right here would worry me. On an intraday basis for the U.S. session, that's where the point of control's been, 5,020. Now, maybe you want to go on yesterday's or maybe the overnight point of control, something like this. Maybe. Might fill down to that yesterday's overnight lows. If that's the case, you're right. The one thing I do like about your trade is you do have a stop out point. Unfortunately, it's right above today's high where everybody can see it. So what's going to stop this market from doing something like this? Boom, and then going. I'm not saying you're wrong. I'm really not. I'm just saying by looking at that market profile, I like your aggressiveness. You want to hit this chain where there's really low volume in here and maybe get a sell-off, and you've sort of locked yourself in above that top. I'm just concerned about how it's going to unfold. I would hate to see this just rotate up, knock your stop out, and then reverse. And then the other thing is this futures contract is rotating above 5,000 where your spot contract is below 5,000. So if you're looking to short here, it's going to be a much different animal. You're shorting beneath 5, whereas if this futures market's going to come down and sort of maybe not necessarily lead the way, because it's not how that correlation works, but it's going to have to break beneath 5. And you're probably in this futures market going to get some bidders at 5. I'm interested. I think it's an interesting idea. Let me see, Sam Deep, data out or not? No, there's no data out today. You're going to get a document coming in about 22 minutes. That's going to be the FOMC minutes. That's for sure. That's for sure. Let me see, extra. Everyone forgot that Iran exists. Everyone is getting ready to catch trash. Yeah. Iran, did you see the big statement out of J.D. Vance? Interesting stuff. Said that all options are still on the table. Iran won't be moved on the red lines of the Trump administration. What do you think the result of that was? Crude oil. This is pretty good stuff here. Every line means something, right? But let's go back to U.S. oil. That'd be easier to see. A lot going on here in the crude oil chart. You can see, let's get that TPO off of there. You see right here, you've got just a nice big uptrend. Right here is when Vance started talking, a bit of a pullback, and then we sort of rotated up to 65. What are we playing with right now in crude oil? 65, no questions. No question asked. So let's back this thing up to our monthly. Is there anything that we can hang our hat on here monthly? Bullish January. Bullish January. Surprises me. Right here, things were going sort of according to plan. I really liked we were going to go take a look at April's lows down around 55. I still think we might, but we're definitely starting to consider the long side of this market. So Fibonacci's just basically measure where we were from that high down to that low, which developed somewhere in December, right? That's December, yeah. Pullback's right at 50%. I'm not a big 50% guy, but if you got an opportunity to sell maybe right up in here, 68, something like that, that could be very good for oil. Oil could go very, very high, very, very high. And if, in fact, war does kick off with Iran, you're going to see oil really rally. Say that 3 times. This is the trade I took earlier today. Let's go right down to a daily. We're on a weekly. Yeah, weekly chart here. Sort of a little 2-week range. Very difficult to use Fibonacci's in this situation, but spike high there, spike low. Pullback was right around 64.79. I was selling 78s, 64.78s. It was a good move. It was pretty much one of the only trades. I only had 4 trades today, but this right here, beautiful thing. Boom, boom. Then you got the compression right around that Fibonacci. Then you broke. Now you're sort of maybe trending higher to end the day. Clearly worried about the conflict. Clearly worried about fresh war over there in Iran. All right, dollar yen. Let's go ahead and take a look at the dollar yen. You've got a monthly chart here. Spike low, spike high, pullback zone. We've been looking at these for a long time. A couple of months now, well, 6 weeks or so. 54, that 54 zone, big time support, no question about it. 50% down there at 52.50, big time support. This is the one I really like down here, the back end of the golden zone, maybe 151. That would be an absolute great area maybe to take a position for a few weeks or maybe a few months here this spring. I would be surprised if this market goes lower than this, even though the dollar is kind of weak. The game's changing. The BOJ all of a sudden is hawkish, right? And then you've got the dollar, which we're getting ready to see those rate cuts in the next 3 or 4 months. Does this market rally or does it sort of stagnate? I think it's going to turn into a real sideways affair, and we're already seeing it. I'm looking for the market really to trade in between, maybe 150 and 155 for a significant period of time. That could be really great for us. Watching this closely, love downside support right there at 150.81. You'll notice the monthly chart, absolute doji. Typically that tells us that the daily is whipsaw, and it is. So the daily's whipsaw, sort of not really doing a whole heck of a lot. This area today, we're up a little bit. We're up almost 1%, so we broke off that 50% line, maybe breaking out of consolidation. Well, I mean, not a bad trade if we wanted to dial it down and say, Shane, I need a trade for today. Spike low there, spike high, maybe a pullback right to that zone. Do we want to buy 154s? Yeah, why not? Wait and see how high this wave goes. Then we can sort of work our fibbies from this spike low right there. Something like that. You'd love to see something like that. Maybe a top up around 158.25, and then 55.25, then maybe a pullback to 154.50, somewhere in there. We're just not really there yet. If you wanted to take a trade right now on a small time frame, it's problematic in a lot of ways. 30-minute chart. Boom, there was the big rally. Compression. Boom, another leg up. Basic Elliott wave right there. Spike low, spike high, maybe. You can be aggressive and go right now buying pullbacks. I don't think there's much problem with that. The big thing is the FOMC minutes, so don't get chopped up if something crazy happens. We're not expecting it, but don't get chopped up there. Interesting, though. Great Britain pound, Japanese yen. This one's not quite as steep. I mean, the uptrend definitely isn't quite as robust as in the dollar yen. So let's go ahead and take this down to, say, a monthly. Interesting. Our monthly level was very good to us. You guys already see what I'm going to do. Spike low there, spike high. Beautiful stuff right around 208.33. A little bit of a draw down there. Went down to, 207.25. So, about a 100 pip draw, 80 pip draw, but nice big bounce. This is an interesting level to me. I'll be watching 208.33, 208, maybe 33 to 50. Very closely as being robust downside support. Potentially tradable, too. We're not that far above it. Let's go right here to say our weekly. Something like this. Big week last week clearly took us right down. Now we're bouncing back. So are we bullish or bearish from this point? Probably bullish. Do I like this trade location? Nope. Don't like it. I want to get closer to this 38%. Let's see if we can do it with a daily. Look at that. Who's laughing at Fibonacci levels? They don't believe they work, huh? Look at that. It's called consolidation around a key level. This key level, 38%. So more likely 208.50, something like that. Spike high, spike low. That's sort of your L formation. Very bearish. But you're back above that key level. Tough one to trade. I think if you wanted to short, you could probably short from right up there, right around 210, 209.94. That's not a bad place to short. If you wanted to buy this market, you could probably buy right in here. Just be aware that it is loading up, and typically markets load up before they move. Getting good rotation right in that zone, so the break either comes there or there. You could probably scalp to the short from there and to the long from there. The idea being that we're not ready to move just yet. It's not a bad trade. All of them are pretty good trades. It's just a matter of, what do you want to risk and what happens when the market breaks. And it looks like it will break either south or north. Right now, probably tentatively bullish just because we're ahead of that monthly level. But on the daily time frame, you're definitely bearish the way that this formation is really just an L, which is extremely bearish. Interesting, though. It's worth trading. There's enough there. All right, let me see. We had a question on the dollar CAD. Let's go to the dollar CAD. Interesting. We had a pretty good trade idea that was built out for this long-term support zone. We just didn't quite get there, and that's okay. That's trading. That's what it is waiting. They pay us to wait. They don't pay us to trade. Something like this swing low, we really loved that, 134 to 134 and a quarter. We just didn't quite get down there, 134.81. Now we're rotating back to the top side. I really would rather wait and buy down there if at all possible. But something like this, a weekly chart, can we find a trade? You look hard enough at anything, you can find a trade. Let's go right here. Let's see, spike high, spike low, rotating around. Okay, so I can already see the premium short. It's right there. 62%, 137.58, plus you got a 13-period EMA, which is in there at 137.50. That area is a pretty good opportunity to be a shorting area for the dollar CAD. Interesting stuff. Let me see. Wow facts. Tamil, FOMC minutes. Positive or negative for the market? Well, when we talk about what the Fed does, they impact the forex. No question about it. So if the Fed's dovish, it's going to be bearish for the USD. When the Fed's hawkish, it's going to be bullish for the USD. Now, what is in today's minutes? We started off today's live stream. I talked about it for a good 10 minutes. What you need to know is there a division in that boardroom? All right. Do people believe that inflation is too high or that jobs are too low or whatever? So the committee, what does the committee believe about the economic outlook? What does committee believe about the employment rates? What does the committee believe about inflation? Because if the committee believes inflation's too high and that economic growth is just fine, then you're not going to get your rate cuts anytime soon. That will be hawkish for the U.S. dollar. Now, on the other hand, if the committee says, well, inflation's in a good place, well, economic growth could be a little bit better, we're worried about employment, then that's going to be dovish. The idea is going to be, we can cut interest rates aggressively and to boost economic growth. Remember, the Fed has two jobs and two jobs only. One is to promote economic growth via maximum employment, so promote maximum employment, and then also ensure pricing stability. Right now, I don't think anybody in the world would argue with me that prices are too high, that inflation's too high. The inflation's become entrenched. Since the COVID-19 era, we have seen inflation remain at levels that it shouldn't be at. Prices are way too high. And when prices are too high, people on Main Street, like you and me, we get hurt. That hurts us. That hurts our savings. That hurts our purchasing power at the grocery store, at a gas station. Now, the gas is sort of an exception because it's down thus far. But if that crude oil pops up over 70, look out. So to ask me, is the FOMC minutes going to be hawkish or dovish for the USD? I don't know. I don't know what's in it. My guess is it's going to be hawkish for the USD because I think we all are pretty confident that Jerome Powell is not going to cut interest rates on his way out the door. So if that's the case, then you're probably waiting until June. Now the question becomes, is it a quarter point in June or a half point? It's my opinion the next Fed chief is going to cut that thing by a half a point first meeting to be aggressive and show the administration that he'll play ball. I would say that's going to be the case. So today, as FOMC minutes, I'm not expecting much of anything to happen. I could be wrong, though. I've been wrong before. Gold, silver, whatever. Silver, $75. Keep an eye on that level. Gold's $5,000. So right now, let's get back to our gold charts. We had, a short, a falling knife, I believe, was the statement. You're not really seeing it. This isn't bad, though. I mean, I'm coming around to the short side of this market. I really am. In the futures market, the spot's a little different, but this area right up in here for a stop loss, at least you know somebody's going to dig in and fight. But, man, once that gets wiped out, you're probably breaking high. How low do you go? Sort of got a value area right there. Yesterday's value area, something like this. Point of control, yesterday's point of control. I mean, in many ways, it really is sort of my B formation that I traded the other day for you guys. It was like this, sort of a capital B, meaning these voids in here typically will get filled in. It's not a bad way to look at this market right now. The problem is on the spot market, you don't really have any volume data. So using a TPO, sort of shady. You'll see that basic formation is sort of conducive of what we just saw in the futures market. And we're not going to get into all that right now. A little bit too difficult of a talk, but if you're holding shorts, I don't hate it. Let's put it that way. Let me see. UNAM. When's the FOMC minutes? Yeah, it's in about 10 minutes. But remember, it's just a document. I mean, I'll show it one last time because we got a lot of new folks that are on the stream right now. I mean, it's just a document. We're not going to do that right now. I already did it. But the bottom line is this. It's just a document, and it's not necessarily going to move the markets the way that you think. All right, let's get right out to our 9 EMA strategy, see if we got any trades to go on here. This is the Euro USD 5-minute chart. You can see that we are sort of in oversold territory. So if we do get a bar close on this time frame above our 9 EMA, then we'll get a buy signal, something like that. Very interesting. This right here, don't really have much going on. We had a bid right in that zone, which is problematic, very, very flat. That wouldn't have worked very well. I would step back. I wouldn't be trading a 1-minute time frame or even a 5, maybe a 15. You might get a nice position trade, an opportunity to buy this Euro USD towards the end of the session. As far as the US dollar Japanese yen, you can see it's almost the opposite, right? You're looking for a sell signal deep into overbought territory. If you do get a retracement there, you could have a sell. What happens if you step back to maybe a 4-hour chart? That could be a great position trade for you. No question about it. So a lot going on these markets. 9 EMA, you can see when you step back to a 4-hour chart, something that I stress a lot. Most people don't listen. They like to trade 1-minute charts and 5-minute charts and whatever suits your fancy. But realistically, this 4-hour chart on the 9 EMA, the way we have it built, it's fantastic swing trading. It's fantastic for swing trading. So right there, you'd have been a seller, a net seller, beautiful. Caught the move. There you would have been a net buyer. Boom, caught the move. This sell would have been a little bit trouble. You probably would have got stopped out. More than likely, probably would have got stopped before the big rush came. But now, I mean, we really wanted to get a bullish close on one of these bars down here so we could have the buy, and we didn't get it. We didn't get our qualifier. So interesting situation here with the dollar yen, a 4-hour chart. Euro USD, let's back off to a 4-hour chart and see what we've got. Interesting right there. That probably would have been a real tight loser. You caught a really good winner down here, though. Depends on where your stop loss would have been. But you'll notice that choppy situations, those can be very difficult. This one right here would have got swept. This area right in this zone, interesting trading. Probably could have taken a series of small losses here. Still, though, on a 4-hour time frame, pretty good chart to be using. Pretty good chart, especially for forex. And you see right here, we can back this off on this Euro USD. You got a real good, interesting place right here, this top. Boom, boom. Takes a while for the signals to load up when you're switching around like this, but we should have got a sell right in here somewhere. 15-minute chart, is that a pretty good one? Well, maybe. Let's go ahead and take a look. Interesting right there. Got a little bump and swept out. This one right here, we got a nice move. This one here, you're fighting a stiff downtrend, it looks like, on the intraday. Would you be looking to take a bid maybe potentially later today? Going into that Tokyo session, could be pretty good. Is a 15-minute a good time frame? 30 minutes pretty good. Look at that. Boom. Do we get a 30-minute bid later today? Potentially. Interesting stuff, guys. If you're interested in trading the 9 EMA strategy, we just put this one out. We put some new materials out here. I'm over on Switch Markets. I just dropped the thing in the live chat. You're going to want to check that out. And then also, if you're looking for a broker, be sure to check out the brokerage service suite over at Switch Markets. They can get you up and running, thousands of markets, pretty much anything that you want. As far as anything else we're looking at today, I mean, I'm going to probably revert back to my my Euro FX. I'm pretty much done for the day, though. See, I've already missed my trade for the most part because we were live streaming, but that's okay. 5-minute chart. There's my area. There's my kill zone right there. My range number 118.02. That's a beautiful scalp. 5 ticks, 5 or 6 contracts on. That's a day's work. So that rotation right there, beautiful stuff. I also have a moving average right there at 18.01. That is really a tough trade to beat. That's a beautiful trade, and we just didn't quite get it. That's all right. Euro USD, as far as what could you be looking at for later today, you got a really nice support zone right around this 117.69 area. I'd be watching that, and then also 117.62. You're not far away from it. Maybe if you get a shot at that on your FOMC Minutes release, potentially bidding those zones could be good. All right, I almost forgot there. Let me see. OG, what is the name of the indicator? That's the 9 EMA OG. Check out the link that I just put in the live chat. You can get that. Get registered and get the whole strategy pack if you want. Let me see. I'm on. Yeah, gold. Yeah, already. You guys just love gold, don't you? I mean, here's gold, right? We've got some folks that are holding shorts. I'm neither. I'm not calling any of it. This would be the game plan, though. Potentially bidding support zones if it does come off. I think that you're probably going to push higher back over 5,000. For me, I'm not interested in going long or short right now. Not even close. Not even close. Apocalypse, is gold a sell or a buy? I'm not even going to venture a guess. I'm sorry, I'm not that guy. I'm not going to sit there and do it. Gold sell now, XX, sell gold. You guys are all getting in on the action. Let me see. Bitcoin was the question, though. I almost forgot about Bitcoin. We have a very, very straightforward approach to Bitcoin. We're not going to reinvent the wheel. We're not going to do anything special. That's a yearly chart. A yearly. Nobody in here wants to look at a yearly except me. There's an old saying, professional trader, I can't remember the guy's name, but it was one of the greats. It was like Paul Tudor Jones or Drunken Miller or Ed Seykota. It was one of them. And they said, when do you trade? And they say, I trade when I see money laying over in the corner. Then I just walk over and pick it up. Basically meaning I trade when the odds are in my favor. These long-term support and resistance levels turn the odds in your favor in a big, big way. Right down in here, yearly support level 57.8, something like that. That's huge. 58,000 is going to be the bid. If Bitcoin falls apart around 58, then you're going much, much lower, 39, 40, and after that, it gets really ugly. So even though I'm still long-term bullish Bitcoin, we're seeing a lot of things come out of the Epstein files right now that could be linked to Bitcoin and crypto. We've got just a situation where there's too many unknown unknowns. That's for sure. That's for sure. We'll go ahead and take a look at our 9 EMA strategy here on our gold and silver here real quick. Let's take a look at a 1-minute gold. Really a challenge here. I'm very, very choppy this time of day. You're well advised to not be doing this stuff on short time frames. Let's take a look at a 5-minute. Yeah, you still don't really have anything. A 15-minute. Interesting. You had a 15-minute sell right there. So there's your sell signal on gold. How would you execute? It'll be relatively straightforward. Get our one-click trader up. Sell it. Okay, so that would be the sell. The idea is you're going to sell right on that bar close. We're a little bit late. Stop loss location is going to be right up here. You got a couple of options. You could put your stop loss there, or you could put your profit target maybe down in here where this order block is. Not necessarily the worst trade in the world. I'm concerned about my stop loss just because that's the high of the day. But, we've got a lot of folks in here that favor that. Or you could play this really tight. You could play this as a tight scalp with your stop loss maybe right above that sell marker, and then maybe bring this up to a 1-to-1, something like that. Or you could still shoot for market structure. Maybe this order block, this base rally structure would be something that you'd shoot for. Really just depends on what you want to get accomplished with the trade. You've got market news dropping here in about 2 minutes, so you definitely want to be sure that you're careful with this right now. That's for sure. But in any case, it's over there. Let me see, Edwin. How about Bitcoin? Yeah, I just looked at Bitcoin a second ago. Macro picture, I'm buying 58s. That's for sure. EMAs, I don't follow you, Muma. How about Bitcoin? Yeah. So in any case, one way that you can get this up and running, okay, we got a lot of people wanting Bitcoin, so let's go ahead and go to crypto 3. Let's go to Bitcoin, open our chart up, go right here to properties. I like the white, color on white, something like this. Go ahead and hit OK. And then you get that strategy right out of that that strategy pack, that EMA, that 5 EMA, or 9 EMA, and you go ahead and drop it onto your chart, and then you're up and rolling. You can see we called a great short here in Bitcoin a little bit earlier today. Let's go down to a 5-minute chart and see what's happening. All right, so internet back up. Everybody back up. All right, here we go. So, yeah, we're having internet issues, server issues, which pretty much is every day now, at least once. So right there, okay, so our FOMC minutes just dropped. Let's go ahead and take a look at exactly what's happening in the market. Let's go back over to our gold trade. Let's see how our gold trade's panning out. Not real great, honestly, not real great. You got a situation here where you're just sort of rotating. Remember, this is how the FOMC minutes happens. This is how it happens. You get the data release, but nothing really happens until the media reads it. Like right now, nobody knows what's in that thing. Let's go over to CNBC and see what exactly the number was. You can see gold starting to rotate higher. Let me see. We're not seeing the data, and really, this is typical. This is typical. I'm looking for a headline, anything, any reporting out of the FOMC minutes. We're not seeing it. Market's starting to roll against you. The biggest thing you can ever do is make sure that you're dialed in with your risk. You absolutely have to. Let's go back over to Bitcoin here. This thing looks like it's going to lose. 5-minute chart here for Bitcoin. I like this, though. You get one of those closes above the 9 EMA. That'll sort of be bookends. Beautiful move right up there. Absolutely fantastic move. Looks like our gold trade's going to get stopped out. 15-minute signal just didn't quite work for us. We'll see. Maybe we reverse. The biggest challenge that you have with these trades, especially when you're taking a short, say, on a gold, a lot of folks were wanting to go short on gold. Okay, well, there was your signal. But the problem that you run into is, especially when your stop loss is above a daily high. Like, take a look at gold right here. This is relatively straightforward. We talked about it. You're still fighting an intraday bullish trend, number one. We know, especially in the futures market, your point of control is right here. So a lot of times those markets have a tendency to go up and test the point of control. And the last problem with this trade is that if your stop loss is above the intraday high or the daily high, it's not good. Not typically good. So still looking for news on FOMC minutes. It's just not out. This is typical of what happens on an FOMC minutes day. You just don't get the release. Okay, right here. This is exactly what I want to see. Thank you, CNBC. God bless you. Let's have a look. Fed officials split on where interest rates should go, minutes should say. Divided Federal Reserve officials, that's what we wanted to see, right? Is there a division in that room? Yes, there is. Divided Federal Reserve officials at their January meeting indicated that further interest rate cuts should be paused for now. So what is that going to be? That's going to be hawkish for the U.S. dollar. We should see gold. We should see those gold trades come off for us. We should see it. Now, we're not seeing it. Let's go to a 1-minute chart, gold futures. All right, interesting. I'm getting interested. Getting interested here. Okay, right there. There was your FOMC minutes. There was the drop. There was the volume. And now people are finally starting to see what was in that paper. Fed officials split. Let's go. Well, right there's the volume. So you can see right there, we moved. Now we're coming back. We're rallying. This is choppy. Well, the decision to hold the central bank's benchmark, and there goes gold to the top side, of course. Well, the decision to hold the central bank's benchmark rate steady was mostly with approval. The path ahead appeared less certain. Members are conflicted between fighting inflation and supporting the labor market, according to the minutes released Wednesday. In considering the outlook for monetary policy, several participants commented further that downward adjustments to the target range would likely be appropriate if inflation were to decline in line with their expectations. However, meeting participants disagreed on where the policy should read. Some participants commented that it would likely be appropriate to hold the policy rate steady for some time as the committee carefully assesses incoming data. What a bunch of BS. Basically, we're data dependent. So we don't need to do anything right now. We need to be data dependent. That's what they said. All right, that tells us exactly. Is there anything in there on the investigation against Jay Powell? Anything at all? Anything at all? Most participants, however, caution that progress toward the committee's 2% objective might be slower and more uneven than generally expected, and judged that the risk of the inflation running persistently above the committee's objective was meaningful. All right, so essentially what we had here was we're going to be data dependent, but inflation's still a little high. That's very hawkish for the U.S. dollar. Means that you're not going to get your rate cut until later this year. Right here, you can see exactly what happened in gold futures. We got a big boom right when the number was dropped, and now we're starting to continue to the top side. It just isn't any good. We talked about the problems with this trade, with this gold trade, holding shorts. A lot of you wanted to hold shorts. What's the problem with that? The problem is your stop loss. Your stop loss is up here, above your daily high. I think we already got stopped out of this nonsense, did we? We're still hanging in there. Market's flat. We didn't get the huge reaction we thought. Stop loss. This stop loss we're playing on the 9 EMA is a lot tighter than maybe that market profile where your stop would be up here above the daily high. I think that this sucker needs to go negative now. It needs to go negative in the next several minutes, or else you pretty much have to temper your expectations about getting any sort of move today. Remember, COMEX gold goes off the board here in about an hour. So you're going to start to see the volume of the gold market really dry up this afternoon. So you don't want to get caught there exposed, especially when the markets are dead. You don't want to do that. This trade right here is what I would call a duck. We're not out of it yet, and we may make money on it, and we've got a good structure in place, but I still call it a duck because nothing's happening. Let's go back over to Bitcoin. I like Bitcoin. I like trading Bitcoin on this 9 EMA is a pretty good strategy for it. Let's see, where is our... There's got to be a way to get over there, right? So right here, what do we have? Nothing. Nothing set up. All right, gold looks like it's toast. Here's silver. What's silver on, say, a 5-minute chart? Interesting. How about a 1 minute? There's your sell. Market's starting to move on silver and gold. Are we going to get some love to the downside? Not really. Sort of right around break even. All right, everybody, I'm going to go ahead and sign off. That's been about an hour. The big takeaway here today was nothing. FOMC minutes are very difficult to trade. I'm surprised so many of you are showing up to trade them. You need to be focused on CPI, NFP, the Fed announcements, Fed interest rate decisions. We covered all for you here. Trade it all live. For me personally, this is always a challenging environment. That gold trade's hanging on, and it may in fact work, but just remember to be patient. 1 to 3% of your account balance on any given trade, and if you have to go to 5 to 7 to 9%, okay, I'll look the other way. But just know that if you get hit, you don't have very many losses in a row. That's for sure. Suman says, sell, sell, sell. Let me see. Why no reaction for the FOMC? Mr. Black, I've sort of been going over and over and over again. This is not a press conference. It is all it is a release of a document. It's just documentation of the last FOMC meeting. It's not a presser. So you guys are a little confused there, I think. Steve Francis, thanks. Great as usual. Thank you, Steve. I'm just trying to help as much as we can. I know that these markets can be a challenge, so we try to help and answer as many questions as possible, and try to put some good ideas out there from time to time too. That doesn't hurt. But yeah, I sure appreciate that, Steve. Thanks for joining me. This is interesting. This is sort of the trade we were scoping right here coming into play. I absolutely love that. That 59.50 area in the Kiwi. I like that one. That's a pretty good one. Okay, guys, I'm going to go ahead and sign off for now. Remember, if you want any of that action, I'm over there with the 9 EMA strategy. We traded it live today. If you're interested, go ahead and check that out. And if not, that's okay too. Always remember that when you're dealing with the Federal Reserve or dealing with any kind of trading, you have to manage your risk aggressively. That's what's going to make you a good trader and someone else a loser. You a winner and someone else a loser is you being able to manage your money and manage your risk. You've got to be able to do those things. We have several traders that do very well, have made great strides over in the How to Trade community. Fantastic place to be. If you're brand new to the markets, tune in, howtotrade.com, get your free account, send me a private message. But I'm looking at a few folks that show up every single day, and they watch the live streams, and they're immense themselves in the market and the news and everything it takes to be a good trader, and they're still there, and they make money. So it's doable. Everybody tells you 95% of traders lose. Well, maybe they do. Don't be part of the 95%. Be one of the winners. Absolutely. Jeanette, you're welcome. Tuku, absolutely my pleasure. And Bobby Bob, always a pleasure. All right, too many folks to say bye to over there in YouTube land, so good to see everybody out. Thank you for the good turnout. If you have any questions at all, be sure to head on over to How to Trade. Ask me. Check out the 9 EMA. If you need a broker, switchmarkets.com can get you hooked up with thousands of markets, tight spreads, and zero commission accounts if you're interested. That's a wrap, guys. I'm out. Have a fantastic trading day. Trade the action well. Watch your risk. Watch your risk, and we'll talk soon. See you.